How you doing? This is David W. Williams, also known as Diamond Dave. And so what we're going to talk about today is another one, another one of the investment risk series. We've done a few of these and kind of let me know how you're enjoying them, whether or not you're liking them. But we're going to talk about something that's extremely important, right? We're going to talk about the concept of profit taking. And this is something that I think is really important because what we see in this particular space of investing, trading, how to make money on the internet, how to make money, going after particular asset classes. One thing that's often missed out is a conversation around when do you take profit? And what I mean is that when do you actually take money off the table? When do you leave the market with what you've gained from the situation? And I think this is really, really important because one of the things that you can realize in this particular space is that you can make money and end up giving it back to the market in the same amount of time it took, or maybe even faster than what it took for you to make it. And we've seen a lot of this over the past 2 to 3 years where a lot of people have run up their account. And then over the course of the next 6 months to a year, they give it all back and then they start over again. Essentially, that becomes their cycle till they leave the market. And that's something what I want you to really talk about today. I think this is really, really important topic because what we see a lot is how to make the money. What are some of the techniques around making the money? We're often not taught what do you need to do to keep the money? And that's sometimes often more important than making it, because if you can keep it, you can, at the end of the game, have more than people that made more than you, but that couldn't figure out how to keep any of it. Now, really quickly, the sponsor of the show is going to be www.thehighestpaid.online. That's our options trading academy, right? And that's for people that are maybe dissatisfied with the money they're making in their 9 to 5. It's for people that don't like the fact they got to take a lot of time away from their family to make the money that they're making. And also for people that don't like the fact that as inflation goes up, the money that they're making is not really being adjusted for inflation. And we figured out how to help people solve that problem by really getting them to understand that they can pull money out of the options market, but also understand the topic that we're going to talk about today. And so I'm very passionate about this topic. It's something I'm very enthusiastic to talk to you about because I have a lot of experience in it, my personal self. We're going to go through a story, a testimony of somebody that's experienced this on a level much larger than mine. But the reason why we're talking about it today, and one of the reasons why I have so many videos on my page around economic and financial topics, is because I want you to understand and try to get wisdom around these topics before you get yourself in the situation. And one of the things that we've been conditioned to do in America is not think about financial economic topics till we get in the situation. The problem is you don't have the wisdom once you get in the situation of how to manage yourself in the situation. Then you also don't have a network of people to go to ask them to help. So then what happens is your ignorance often is the reason why you're going to get defeated by the situation, because you don't have wisdom around it before you get into it. We sometimes think that I should not get wisdom around a situation until I arrive at the situation. I've been guilty of that myself. But what we want to maybe consider is that should we get wisdom around a situation before we show up? But it's the mentality of like being in school and asking the teacher, well, what am I going to use this for? You're going to use this for a problem that's not going to show up for 10 years from now. So the reason why I'm teaching you problem solving in high school is for problems that are going to show up when you leave high school, right? But it's often not expressed to us that way. So that's what we're going to talk about today, right? So I want to encourage people. We're getting ready to go into the fourth quarter of the year. So we're in October right now, November, December, we're going to be in 2025. Really ask yourself, right, how your financial situation is going to change or how it's going to improve for the benefit of you and your family if you don't do anything different. And I want to really encourage you to not just wait for a discount or a sale on what we do to move forward with what we've been doing, because I really believe that the value of what we do, I'm really enthusiastic and passionate about doing it, is greater than the price that you're going to pay to be involved in it. So let's keep going, right? So what we're talking about is investment risk series, right? Let me blow it up a little bit more. Profit taking. Okay. And profit taking means when you exit the market with your profit. So the first question is, when do you take profit from your investing, right? You're an investor. When do you decide it's time for me to take profit? And I think that's really, really important because for a lot of people, they often have not made that determination. What we talk about is how much money we made. What we talk about is a return on the investment. What we don't talk about is when do you decide that you're going to take profit? When do you make that determination? Do you make it before you go into the investment? Do you make it while you're in the investment? Do you have people that you counsel with? When do you take profit? Because here's the issue. You can go to a financial planner for long-term investing, right? And they're going to put you on a horizon based on a year of your life or based on when your retirement is, right? So let's say you go to a financial advisor. You say, I want to retire at 65. They'll put you in a fund to let you retire at 65. That's when you take profit. Okay, so you don't worry about anything because you're not tripping until you turn 65. That's how it traditionally goes for most people, right? So you're 30 years old, you get with a financial advisor, you get with a CFP, and you put your money into a fund, and it's designed to allow you to retire at 65 or 60 or whatever, 50, whatever. But you're not looking to retire until you hit a certain chronological year. That's cool. Now, here's the challenge. That's your wisdom around profit taking. So your wisdom around profit taking and your understanding around profit taking is at that chronological year. Okay, cool. You now get into another scenario where you can invest in something and the profit taking isn't designed to be at a chronological age. So then now where do you take profit at? Right? So let's say we buy a home and we're looking to have that home value appreciate, and then we want to sell the home. Where do we take profit? So do we wait to the home? We can get $50,000 greater than what we bought it for. We can get $100,000 greater than what we bought it for. We can get 150. Where do we take profit? Because we're not looking to do what traditionally we've been taught, which is what? You look to take profit on your investments when you hit a chronological age. That's the traditional way in which most 9-to-5 working class people have been taught how to invest. Now, once you step outside of that particular paradigm or that particular dynamic, now what do? Do you have understanding, or do you have wisdom, or do you have education, or do you have counsel around how to now navigate these new spaces? And many times the traditional financial advisors don't know how to give you education on those type of investments because that's not what they've been trained into. They've been trained to sink you into a long-term chronological age fund. There's nothing wrong with those, right? But because that's all they're training, they don't know how to advise you on anything that's not a long-term chronological age fund. They have no idea how to even create a model around it. You start talking about Sharpe ratios, things of that nature. They don't know what you're talking about. VAR, how to navigate these particular spaces where it's not about when I hit a chronological age, I retire. Or when I hit a chronological age, I take my money out of the investment. They often are going to struggle because that's not their training. And so that's what I want you to understand. You want to ask yourself as an investor, when do you take profit from your investing? Right? We're going to the next one, right? The most difficult thing for most investors and traders is taking profit. I know this for myself. And so let me give you a really quick upside. Anybody here? So big up to Terrence S for the $9.99 super chat, man. I really appreciate it. Also being a mod. Raygun, man, I appreciate you coming through and being a mod once again. Appreciate the $2 super chat. So Michelle Green's been trading with us for a minute. Big up to Michelle Green. She's been part of the Stock Market Sharks for a minute. So has Mr. Terrence S, right? Learning how to trade is really not that difficult. It's difficult, but it's not like doing brain surgery. I don't think it's more difficult than driving a car down the street, especially not the highway. The most difficult thing for most investors and traders is taking profit. What do I mean? Many people come into the investing space. They come into the trading space, which is really like, to me, a form of investing. It's just a shorter time frame. And they experience making money, giving it back. Making money, giving it back. Making money, giving it back. And so therefore, when they look at their account at the end of the year, they may not be positive. They may barely be positive, or they may be positive. But it's not that they didn't make money over the course of the year. It's that they gave a lot of the money back. Because what we do in this space is we lack education around how to take profit. Right? And that's something that when you work for a firm, when you work for a fund, they're going to make you take profit. It's not going to be you're going to get to decide. They have a particular model that they're operating under. And once you get to a certain percentage of profit, you have to execute the trade. You have to exit out of the trade and keep moving. Now, they can do that a lot of times easier than other people because they're dealing with a larger account size. So 25, 30% for them can be a large amount of money compared to what we're used to. However, many times regular people, once they get outside of the chronological take profit structure, where I take profit at this specific age, they often don't know when to take profit. And so what can happen is they can make money, they give it back. They make money, they give it back. I had a particular couple that I was doing a one-on-one consult with. And I explained to them something I had to learn the hard way as a trader. If you're positive on a trade, if you only take $1 of profit out of that trade, take something. Because what we often do as traders and even investors, when we have smaller accounts, we will get a return and we'll take that whole return and throw it back into the market. The downside of that is that you never really realized the profit because you never took anything out. Now, from an accounting standpoint, you did because you sold it and sunk it back in. But you never took anything out of the market. And what I mean is that even if I sell something, as long as I stay in the market, in my mind, I never left the market. What I mean is that I take that money out of the market and put it somewhere else just to hold it. So at least I realized some profit that's no longer involved in the markets. Because what can happen when you put your money back into the market? You're not going to lose it. Therefore, if you have a play and it goes up 100% and you take your initial investment or your initial trade and then you take the gain and you sink all of that back into the market, what can now happen? You can lose not only what you gain, but you also can lose your original amount, right? And something I had to learn how to do is to make sure that on every trade, I take something out of the market. I separate that, and I'm gonna go into that a little bit later in this video. But that's the most difficult things because especially if you got a smaller account, you may be trying to grow your account very rapidly. So then therefore you may take every gain and sink it back into the market. And that can be challenging for you because why? You've never realized any real profits that you've left the market with. Now, what you're doing is you're putting that money back at risk. It's not that you don't know how to trade. It's not that you don't know how to invest. It's that you don't have a really, really strict model around management of your account. And that's the real skill once you actually learn how to trade. See, once I teach you how to trade, or Chastity teaches you how to trade, or the people that buy the hood teach you how to trade, you realize that's really not the issue anymore. The issue now is managing the account. That becomes the real strategy now. It's really not the trading, right? But because the space is full of so many beginners, because many people come into the space and they wash out, they go do something else. Because the space is constantly churning beginners, and it's really full of beginners. The bottom of the funnel is always the most inexperienced people in the space. The conversation is always based around just how to make the money. The conversation rarely is around how to keep the money, right? And so that's why people can get entertained by these really complex tax strategies and yada, yada, yada. But the question is, you make the money first. So what's interesting is that people are either listening to how to make the money or how to do these complex tax strategies. But the problem is that they're still a beginner, but there's really no education on really how to actually successfully manage your account once you actually start making the money, right? And I'm not talking about a complex tax strategy. I'm just talking about how do you make sure you leave the market with something as opposed to believing that you got to do the Dame Dash perspective where I take all my money and I put all my money right back into the market, right? I don't really believe he does that, but I believe like that's his brand because that's no way to really run a business. And you're talking to somebody that's really taking their own business profits and sunk into other projects, but you got to take some of the money out. I don't believe that you take 100% of your business profit and you sink it all back into the business. You got to realize something, right? But that's what I want you to understand. This is going to be the most difficult part for most investors and most traders is understanding how to take profit. So what we're talking about again is investors, and that's somebody who desires a positive return from their investment. So this particular topic has really been about getting investors to kind of understand what are some of the risks around what you're doing? Because as an investor, you desire a positive return from your investment. And what I mean is that you're investing in something to get a positive return. You're not investing in something to lose your money to get a negative return. So a really quick and easy definition of an investor and how I want to kind of encourage you to see yourself when you're looking in the financial space is that you looking to get a positive return from your investment. And so I would really encourage you to look at things from that particular standpoint. And so that's what we're going to talk about. We're going to talk about this concept of where do you take profit? Where do you leave the market with what you gained? And why are so many people resistant to leaving the market with their gains? Why do they feel like even when I am extremely successful as an investor or as a trader, I'm looking to hang around the market to see how much more I can get, right? And so that's what we're going to talk about. So really quickly, for the people that came through, Michelle Green, what's going on? Mr. Stroman, what's up with you? I appreciate you coming through. Miss Brandy Williams, account tax, what's going on to Miss Williams? Mr. Pierre Louis, what's up with it? Roscoe, what's going on? Girls of Pearls, appreciate you coming through and being a mod. And Roscoe, appreciate the $2. Have you seen the story about the trader suing RBC? Yeah, we might be getting ready to get right into that right now. So let's go into the story that we were talking about, right? Okay, so here's some Yahoo Finance. Says day trader says he made $306 million on Tesla, then he lost it all. This story is also being republished, also, I believe, on Bloomberg, right? So this story is about a guy named Christopher DeVocht. That's his pronounced name. He's from Vancouver, right? He said he went on a hot streak. He's suing RBC, Royal Bank of Canada. At the end of 2019, his account with the brokerage division was worth around Canadian $88,000. Within 2 years, he turned that into around 306 million USD. So 2019, the account had a value of around Canadian 88,000, be a little bit less in US dollars. And within 2 years, it had a value of 306 million USD. That's the actual value of the brokerage account, right? He had not left the market with that money, right? He didn't cash out. He didn't leave the market with the money. So when Tesla stock fell in 2022, he lost it all. According to a lawsuit he filed this week against RBC Dominion Securities, RBC Wealth Management, and the accounting firm Grant Thornton LLP, right? So DeVocht now claims that the advice he received, geared mainly towards minimizing taxes, was negligent and failed to take into account his level of financial sophistication, right? His Tesla strategy involved loans from a Royal Bank margin account. So really quickly, what we're going to talk about is the fact that this guy was trading using what we call a margin account. Now, I learned about margin accounts when I first kind of came into the market. I was learning about long-term investing, because margin accounts just don't apply to traders. They also can apply to long-term investors. And so this is something that we're not taught, because when you're going and talking to a financial advisor, they're rolling out the 401k plan. They're rolling out the 60-40 index fund, the bonds plan. They're not teaching you about margin. So let me tell you a secret that a lot of people don't know. And it's the truth. It is the truth. I'm not going to lie to you. Erica talks about this a lot. I'm going to be 100% with you, right? The rich in this country get richer by using debt. That's just a fact. We're in a debt-based society. The wealthy and the rich in this country get richer by using debt. And their ability to do debt allows them to continue to expand their net worth. That's just a fact. There is no lying about that. That is 100% a fact. They use debt to continue to expand, and the more debt they can get allows them to take on more risk, which means what? They can continue to build more wealth, right? And one of the discrepancies or the inefficiencies in this particular society, if you believe it's that, or you may just believe it's straight up racism, is that many people are not given that kind of access to the capital markets. And because many of us don't kind of understand that, when politicians sit down and talk about it, we're often not able to have a really robust conversation about that. They had a brother, he got a finance degree, I believe, from FAMU. We're not going to go into that, but it is what it is. He did get a finance degree. And he was on the Breakfast Club the other day, and he was kind of going into that, but because their audience really doesn't understand that piece, in my opinion, they're not really able to have a robust conversation. And the Breakfast Club is there rolling out a particular script for him, playing gotcha games, as opposed to really getting him to really express how he believes that best of his ability, even though he's a politician, how they're going to allow certain groups that have been marginalized out of the finance space over the last, decades, access to capital, because it's really, really important. So when I first came into the long-term investing space, my person that was teaching me taught me about margin accounts. So here's what you can do. Let's take the trading to the side because we're talking about investors. You can go open up a brokerage account and you could be buying stocks to hold them for a long period of time. And based on the value of your account, the brokerage account may allow you to get margin. And what I mean by margin is that you can take a loan from the brokerage to buy more securities and buy more assets, right? So let's say you got an account that has a value of $250,000, right? They may allow you to take a margin against the value of that account, and then you can use that loan, which is really what it's going to be, to buy more securities. So now what does that allow you to do? It allows you to expand your account. Then as the market continues to go up, what you do is now you pay back what you own the brokerage account and you keep the rest. Then you just rinse and repeat. So that's what I want you to understand, is that this is a very, very powerful strategy that the rich have been using and the wealthy have been using for a long time, as long as they can get access to capital. We live in a debt-based society, right? So this is what this young man did. He went to this particular brokerage account and he got loans, right, from the Royal Bank, right, from a margin standpoint, to continue to expand his account. There's nothing unusual about it. So what they do is they give you this story to make you seem like it's the worst thing in the world, but you may not be aware is that the rich and the wealthy do this all the time. This is how they continue to expand their wealth, because they're giving access to these type of vehicles or these type of products to continue to take on the debt or take on the risk. And then when it goes their way, they're even richer. And so this is not anything abnormal. So I just want to make sure people understand, like margin accounts, you can right now, if you have a brokerage account, reach out to your brokerage and ask them, what are some of the conditions around taking out margin based on your account? And they'll either give you some documentation or they'll speak to you and kind of let you know and kind of get you to understand what are some of the terms, how you have to pay it back, yada, yada, yada. But it's available to you. And it will be even more available as the cost of capital starts to go down. It will be easier and easier to get margin. And I'm going to tell you something. I don't want to sidetrack it. I don't want you to get thrown off. There are people right now that live off dividend payments from their brokerage account that they built up by using margin. It's a very sophisticated strategy. It takes a lot of management, it takes a lot of skill. But they do this, and they're not wealthy people. They just learned the skill of doing this. This is an actual skill that you can go learn. It may take you 10 years to figure out how to do it. You can also crash doing it. But there are people right now that are living, they making $100,000, sometimes $250,000 a year off dividend payments that they built up using margin on a brokerage account. Right? It's not something that people talk about because there's a lot of math and there's a lot of management involved in this particular space. But there are people that are doing this. Now, a lot of people on YouTube are going to sell it to you, make it seem very easy. It's not easy. It's something that you have to learn the skill of doing, right? You have to learn. It may take you 10 years to learn how to do it. But once you know how to do it, now you know how to do it. And then you can leverage that to do certain things because you know how to manage this particular skill, which is taking debt, taking margin to support your lifestyle. Right? So it is what it is. I'm just letting you know that this is available to you. It's not anything that only people like Elon Musk can do. So let's keep going with this article real quick. So DeVolt was good at trading Tesla shares and options. He said in a lawsuit, but he was in his 20s, struggling with health issues and had a limited understanding of financial issues. So when he first went to Royal Bank in 2020, he wanted a loan so he could move out of his apartment and buy him a house. At the time, so he was trying to buy a house in one of the highest real estate markets in the history of the world. At the time, his portfolio was worth around Canadian 26 million, which is going to be a little bit, I think, more USD. And rising a little bit less USD because the Canadian dollar is worth more, and rising rapidly according to the civil claim. So at the time in 2020, His portfolio is worth $26 million. Now, what I don't understand is that if you got a portfolio worth $26 million, why don't you cash out and just buy the house? I don't get that part. So you got a young man in your 20s with a $26 million portfolio. I don't know why you're trying to get a loan. And y'all may say, well, David, you just said use your money and use debt to work for you. I understand what I just said, but I'm not necessarily how buying a home is going to increase his wealth. Right? So you taking on a loan and looking to buy a house, I'm not getting it. But that's just me. That's what he wanted to do. So he had a portfolio of $26 million. He looking to get a loan in 2020 so he can move out of his apartment and buy a house. Okay, cool. Let's keep going. He was soon referred to a coach and a coordinator within the bank who connected him to an accountant at Grant Thornton, according to the complaint. So what they did was when they realized that he got such a big account, they came at him and said, hey, you know, we want to help you with whatever you got going on. We're going to give you people. Now, here's how this game is played. What they really want to do is sell you products, right? And when you're dealing with a bank, a loan is a product. So this is just my opinion. But when the bank realized that he has a portfolio worth X amount of dollars, what they want to now do is sell you a bunch of products. Because you're a good candidate for their products because you can afford them. Then they give you with an accountant who's supposed to help you manage your account, Grant and Thornton. And you know, this is how things work, because if you don't know accountants, if you don't have networks, if you don't know people like Brandon Williams, you don't know who to call. Because if he has a portfolio of $26 million, he should already have an accountant. But we're going to kind of talk about that later. Again, when you don't have wisdom and understanding around these particular topics, when you come into it, you now come into it without wisdom and understanding, right? Because I didn't have to get nowhere near $26 million before I had me a CPA. I wasn't nowhere near that. I wasn't nowhere near $1 million. So I don't know why you got a portfolio of 26 million and now they're trying to find you an accountant. You should have already had an accountant, in my opinion, before you got to that particular stage. Okay, let's keep going. So the assembled team of professionals advised him to incorporate a company, roll all his securities into it, and conduct trades within the company with a strategy of accumulating as many Tesla shares as possible and holding them for as long as possible, right? So the idea was to convince Canadian tax authorities to view it as an investment holding company, not an active trading business, because he paid lower taxes that way, according to the complaint. Now, you know, you heard on YouTube forever, you need to get a holding company, you need to get a holding company, you need to get a holding company, yada, yada, yada. And that sounds real sexy, but the really issue is that you need to actually be making some money, right? Having a holding company with no money going through it don't make any sense. But people are, you know, they're caught up in these complicated tax structures or businesses that don't drive any revenue, right? Unless you're making over a certain amount of revenue, there's nothing to hide from the government anyway. You don't have it, right? So if your business is making $30,000 a year, there's nothing to hide from the government. So you don't need to be worrying about a complex tax strategy or somebody suing you to take away a $30,000 a year business. I mean, let them have it. It's only worth $30,000 a year. So they put him into a holding company. And I've seen this particular concept where we don't want to make it look like an active trading business, because one thing about being an active trader, and I know this for a fact, is I don't know Canadian law because I don't know their tax laws. But as traders, we're subject to paying a lot of short-term capital gains, also kind of based on what we trade. So if you trade futures, it can be different. If you trade SPX, it can be different. I trade a lot of equity options. It very much hits me. I forgot what else. I don't know about crypto because I don't really trade crypto like that. However, as a trader, we get hit with a lot of short-term capital gains because we're constantly moving in and out of positions. So they probably came up with this particular strategy to try to make him avoid some of that, but I'm not sure because I don't know Canadian tax law. But that's something that we deal with as Americans. And so that's why I'm very adamant about speaking about certain issues, because as a short-term trader, and when I say short-term, I mean any position I hold under 12 months, I'm taxed at a higher rate than the average person based on their income. So I feel like I can talk about anything I want to talk about. I can talk about defunding the police. I can talk about whatever I want to talk about. Why? Because I'm paying taxes, right? And what I've had to do with my CPA and some of the stuff I still need to do to try to mitigate some of my tax liability. I mean, I can talk about whatever I want to talk about, because as traders that are trading and we're not holding our position over 12 months, the government wants to come in and tax us at a higher rate. So I can understand why they came up with this particular strategy. Now, I don't know if this strategy only works because you got an account over a certain size. I don't know, because it's not something I've ever been approached with. But that's something I want people to understand, right? When you're trading in and out of position, especially on a shorter time frame, that shorter time frame is going to be under 12 months. The federal government wants to come in and tax you, to me, at a rate that's just ridiculous. It doesn't even make any sense, because why I don't like it is because I'm taking on all the risk. I'm doing all the research. I'm doing all the study. I'm putting my capital at risk. And you're not coming in and you're taking this big piece of my win that you did nothing to help me get. Right? So nobody can ever tell me that I can't talk about defunding a government agency. I can talk about whatever I want to talk about. I can desire to defund any government agency, because the same government is coming in and taking my money after I do all the work and I put forth all the effort and I take all the risk on it. I put my money at risk in the markets. The government's money is not at risk. It's my money at risk, and the government will not make me whole. I'm not Lehman, even though I think they went out of business, but I'm not any of these major investment banks that got made whole in like '08. I'm not the car manufacturers. The government's not going to come in and make me whole if I blow my account up, right? And so something that I'm adamant about, but I haven't really got the political advocacy yet. I was talking about somebody about that this week. Is I wanted to where you don't get taxed on capital gains as long as your gains are under $50,000 a year. Because even if you buy an equity, but you're not necessarily a options trader like me, you can get still hit with that capital gains if you hold it a short under that 12-month period, right? So I believe that they're not incentivizing a lot of people to invest in the market, because I don't believe all our investments should have to be chronological age profit taking, where I invest into a long-term equity fund and I don't look to get out until I'm 65 or 70 years old. You might want to buy something and hold it for 6 months and exit. So I feel like if it's under $50,000, they should not tax you on capital gains. I think that can incentivize and really influence more people to get into the markets. But that's just my personal opinion, right? So this led to extreme concentration in Tesla that came with those risks. When the stock sold in 2021, it paid off. His portfolio surged to Canadian 415 million from 186 million in a span of 8 months. So in 8 months in 2021, I remember when Tesla ran like this, because they had the stock split and all that type of stuff going on. It went from 186 million to Canadian 415 million. That's a lot of money, right? Tesla shares suffered a decline and rallies through 2022. DeVos tried to recoup some of the losses by borrowing Canadian 20 million from the corporation. So he took a loan and using it to make shorter term trades in his personal account. That strategy failed and the money was lost, he said in the complaint. So that when the shares, so even steeper declines in October 2022, DeVos Corporation had to sell its Tesla holdings and repay loans from a margin account it had with the Royal Bank, according to the suit. So I'll repeat this again so you can understand it. When the Tesla shares saw even steeper declines in October 2022, DeVos Corporation, which was the holding company, had to sell its Tesla holdings and repay loans from a margin account it held with Royal Bank, according to the suit. That's what we call a margin call, right? And so that's a movie that we talked about maybe 2 weeks ago, but it's called margin call. So what happens when you got a margin account? You got to understand something. That's the bank's money. It's not your money. It's their money. There's conditions around their money. At any time, and it tells you that in your terms of service with the margin account, they may tell you, you got to pay us back X amount over this particular amount of time. But at any time, they can call it back. And what I mean by that is they can say, hey, unless you give us some more money, right? Unless you give us some more money, we think your positions are at risk and we're going to lose our money that we gave you. So what we're going to do is we're going to force you to sell your positions. Now, either you can sell them or we can sell them. It don't matter to us. But what we want to do is get you to sell your positions, make yourself liquid and give us some of our money back because we believe your positions are under threat. So he was able to get the margin when Tesla was going up. As Tesla started to go down, he got margin called. And this can happen. This is part of having a margin account. Because why? It's not your money. It's their money. And so what they can do is they can change some of the terms of the money. But when you're a seasoned trader or seasoned investor that you use margin, you know that you can be margin called. If there is a scare in the market If those brokerage firms feel like that, the economic environment has changed, they may just start margin calling people. And you got to either find their money, give them some more money for them to feel safe, or they just liquidate your securities so they can get their money, and then you get forced liquidation. That can also happen. So this is how this game is played. So that's what happened to this particular guy. Now, when he was up a few $100 million, I don't know why he didn't sell everything, but that's me. So the Devoted Corporation tried to mitigate the losses, but their security holders are worth nothing, he said in the complaint. If not for the inadequate advice DeVault received, he and his corporation would have preserved a substantial portion of their wealth and implemented financial planning that would have not resulted in the loss of their entire net worth. So DeVault and his corporation are seeking general damages for breach of contract and negligence. He also claims that Royal Bank's recommendations to make 25 million Canadian in charitable donations further eroded a significant chunk of his wealth. So at one time, he had a portfolio of 415 million Canadian. That's a ridiculous amount of money. When he started at what, 90? I'm sorry, he started at 26 million. So he started with a 26 million portfolio, and literally in about a year, maybe a little over a year, he had 415 million. The question is, why wouldn't he get out of the market? Right? That's the question you want to ask yourself. Why would he not exit out of the market when he was up so much based on where he started from? Right? How come the person in this article did not take profit when they had more money than they could ever spend? And so that's the question you want to ask yourself. But did they know to take profit? Because when we're having these kind of conversations, we notice that those don't really get people riled up. They don't create a lot of strife. They don't create a lot of emotion. They're not seen as interesting. So when do you learn that you need to exit? When do you get that education when the education is being given, I'm not in class? Because I want to see somebody talk about Sean Combs. And two, because I don't never believe I'll ever get in that position, so I'm not worried about it anyway. But see, the thing about it is that you don't have to be up a few $100 million. You can be up 100,000. Or let's just say you come into some money. Let's say something happened in your life and you come into 30,000. What do you do with it? Do you know? And I think that's the problem. When we've just been educated to think that we just spend money, we don't have wisdom and education around how to manage the money, because we don't believe we need the wisdom and the education until we get the money. But the average person, if you say, hey, man, you come into $40,000, what you going to do with it? They're already thinking about what they're going to spend. Let's say they got all their debt paid off already. Now what you do with the money? I don't know. Right? And so you have an individual that already had a great run when he was at 90 million, I believe. He already had a great run. He was able to get up to another 300 something million. And he didn't know when to leave the market. So he started taking on margin for what? Why are you taking on margin, bro? It makes no sense to me. Right? So when he had 26 million, in 2020, first, again, I don't know why you're taking out a loan to buy a house, but that's me. But you now allow these people to convince you to take on more and more margin. Now you up 415 million. Why not sell all your positions and leave? Now, I know what he thought. He thought Tesla was going to keep going up. That's what he thought, because Tesla had gone up for 2 years straight. Tesla, I think 1 year had a 300% return. So he, like a lot of people, thought Tesla was going to keep going up, and he didn't see 2022 coming. Now, everybody in stock market sharks saw 2022 coming because we talked about 2022 coming, but he didn't see it. So the problem is, again, taking profit when you got more money than you can ever spend, and you stay in the market and just, I guess you think it's just going to keep going up. So here's what I want you to understand. When you're an investor, so here's something that happens on the internet a lot. People will come at you, and Erica's talked about this, she's 100% correct. If you live in California and you own a home, you're a millionaire. Right? If you live in California, you own 2 homes, you're a millionaire. If you live in California, you own 2 homes in San Francisco, you're a millionaire. That's just how it works, right? If you own a brownstone in Brooklyn, New York, Harlem, any place in Manhattan, New York City, you're a millionaire. So you can get on the podcast and say, I have $1 million net worth. I have a multi-million-dollar net worth. You do. You're right. You're not lying. That's a fact. But you know what? That's on paper. So it's easy for these California dudes to get on the internet and be like, yeah, man, I got a net worth of $5 million. They own 3 homes. And they don't even own the home outright. Right? That's another paperwork game that people are not aware of. They don't own the home outright. They ain't got the deed to the house. Right? Big up to out here in Atlanta, man. Big up to Rollo for trying to teach people about deeds. They ain't got a deed to nothing. Right? But yeah, they got a $5 million net worth. They own 3 houses in California. Got a $5 million net worth. That's a fact. We're not going to say you lying. It's the truth. The issue is that that's on paper. See? So because we don't really understand the space, we don't understand the difference between a paper gain. What a paper gain actually is, that's a gain on paper. Right? You learned that if you take accounting, you can go to your community college right now and take accounting. They'll teach you about an unrealized gain. We call it a paper gain. It's a gain, but it's just on paper. It's on an accounting statement. When you look at balance sheets, you see it all the time. Right? If Miss Hill has a business, Miss Evelyn Hill, big up to her. She has a business. And I got a business. Right? Even though I'm not supposed to count it like that. Right? You have something called accounts receivable. Miss Hill may owe me over the next 90 days X amount of money. I may say that my value of the company is based on the money that Miss Evelyn Hill owes me for services I rendered to her company, and use that to really state the value of my company. Because once Miss Evelyn Hill pays me, then I'm gonna have the money. I mean, you can do that, but it's really a paper game. It don't matter till she pay me. So we got a statement as traders, and I want people to understand something. It don't count till a trader count it. Until a trader counts it, it don't count. And what I mean by that is that until you actually realize it, you haven't made any money. So many times as a trader, I can look at my trading account and it can tell me that the option has a value of whatever. That can change day to day. That can change hour to hour. That don't mean anything. It doesn't mean anything until I sell it. Right? Because often when you're looking at your trading account, you're looking at the ask price of the option. You're not looking at the bid. So it may say that your option is up 150%. That's 150% on the ask. That's not 100% on the bid. So you can say you got a home that you may feel is worth $250,000. Okay, find somebody to give you $250,000 for it. That's how you know what it's worth. You understand what I'm trying to tell you? It don't matter what the county say. The county can give you an appraised value. The county gonna buy the house from you? Because I guarantee you, if the county put a bid in on the house, it's going to be well under what they appraised it for. Because they're not in the business of buying houses. Right? So you understand what I'm trying to tell you? So a person can come to you and say, I have a real estate portfolio valued at whatever. That means nothing until they find somebody to give them the money for it. That's how you know the value of the property. Once you get somebody to exchange hands with you over that property, once that money hit your hand, hit your bank account, that's the worth of the property. So you can go get all your properties appraised by whatever appraisal company who won't give you a formula on appraisal. And you can come back to me and say, David, I got a value on my properties of $10 million. Cool. I'm not going to argue with you. But you know what the value of that property is when somebody actually gives you money for it. You may put it out in the market and realize that really it's $5 million once you actually found somebody to buy it. So that's why you see all these entertainers, they build these custom houses. And they say the custom house is worth $20-something million. And when they go to sell the house, they can't get nowhere near $20-something million for the house. Because why? It's a custom-made house just for them. So they can't even find a buyer for that house. So the house really don't have that kind of value. That's why years ago, Whitney Houston house was on the market forever because she couldn't get anybody to give her what she wanted for the house. Because why? The house was made for Whitney. Don't nobody else want that house? 50 Cent bought Mike Tyson's old house. That was crazy to me. But Mike built that house for $20-something million. When 50 bought it, it wasn't nowhere near $20-something million. Rick Ross bought Evander Holyfield old house. He didn't pay anything near what Evander Holyfield paid for that house. Because why? It wasn't worth that. It was worth what Rick Ross paid for it. And Ross just wanted the land. He didn't want that house. I'm surprised that house still standing. I would have knocked that house down and built me a whole nother house. I just want the land. You feel me? So that's what I want you to understand. There's something called a paper gain. That's a gain on paper. Many people are coming at you and they speaking on their paper gain. When I show you my options trades, what I'm showing you is what I sold the option for. I'm not showing you the paper gain. I'm showing you what I sold it for. Sometimes the paper gain be way higher than that, but I haven't sold it. Right? So I'm showing you what I sold it for. Many people are on this internet, especially in the real estate game, and they're talking about paper gains. They're evaluating companies based on, initial offerings and series offerings and things of that nature. Mathematically, it makes sense, but you ain't went to market yet with your IPO. We don't know what that company's valued at. Realized gains, a profit after you sell the position. Again, you don't know what something's worth until you sell it. Right? Once you sell it, the market's going to teach you the value of it. You understand what I'm trying to tell you? And so what happens is a lot of times as investors, you can buy a stock. The value of the stock can go up. Like in this example with Tesla, you see a big number in your account and you don't realize you haven't made anything on that until you get ready to exit. You need to find somebody to change positions with you. But you're gassed on what the account brokerage is telling you is worth all this money. You need to find somebody to change positions with you for that stock. And so I think what I really want to encourage you to do as an investor or as a trader, realizing between a paper gain, a gain on paper on an accounting statement, and a realized gain, what's your profit after you sell? They're not the same thing. And many times people, but especially in the real estate space, but also sometimes in the business valuation space, they're giving you a paper gain. They're not giving you the realized gains, right? Because they haven't sold anything, so they don't know what the worth is. It's worth what you sell it for. I may feel like my car is worth $20,000. I need to find somebody to give me $20,000 for it. That's how I know what it's worth. The price I put on is not relevant. And so that's what I want you to really understand about this particular space. This is the risk around investing, is not understanding these two concepts. The most difficult thing, again, for most investors is taking profit, right? Always understand that. For most investors and traders, the most difficult thing they're going to run into is take profit. That's why a lot of people go broke in these games. And you'd be like, well, you ain't never make no money. Made a lot of money. On this particular article, if you read the comments, there's a lot of people saying, I lost 6 figures in the market. I lost this amount of money in the market. I had to bounce back. They're not telling you I didn't make money. They made money. They lost it all. And so that's what I got to get people to understand. This trading that I do, it's not a magic trick. It's not a magic trick. It's a skill. You understand what I'm trying to tell you? The skill is leaving with money. It's not really making the money. The real skill is leaving with money. Because again, you can make the money, go into another play and lose the money you made on the first play. That can happen. You can make money in real estate and flip in a house, put that money into a second house and lose the money you made on the first house on the second house. It can go like that. So the real skill is getting out of the market with your money. The skill is really not making the money. But when so many people really don't know actually how to make money, they think that's the real skill. Once you learn how to make the money, you realize the real skill is taking the money. But it's taken me a long time to really understand that. In my VIP course, there's a woman on there named Mecca, and she kind of talks about her management on her account and how she manages her account. And now she's had to be very, very diligent in doing that, because once you really learn how to trade or you learn how to invest, you realize that's the real skill. Many people, when they start making money, they start finding things to do with money that they never would have found to do if they didn't have the money, because they just learned how to do without. And I'm not talking about like your basic necessities or your health care or food. I'm talking about you'll start finding a reason to spend money once you start making money. It happens to a lot of people, right? Because you really don't know what to do with the money except go spend it. And so I don't really blame people, because I know how they've been socialized before the money ever hit their hand. So there are people that we don't have money, but we already know what we would spend money on before we ever get the money. So then what happens once we get the money? We know what we're going to spend it on. You feel me? So that's something that people really want to understand. I really want to encourage you to make sure you educate yourself and try to get some understanding on what to do with the money before you actually come into the money. So when you go into an investment, do you know what profit you're looking to take out? When you go in, do you know what you're looking to take out? This individual in this story had no exit strategy. He was up 300 something million. He still didn't know when to leave. Yes, he thought it was going to get to $1 billion. I don't know. I don't think he ever had a strategy. But I know the average person don't have a strategy, right? They don't. They really think, many people think investing and trading is a magic trick. And it's represented to them as easy peasy, 1, 2, 3, easy bake cake. That's how it's presented to them, right? And they really, they believe that's how it's going to work. And so they come in thinking like, well, I made the money easy, and, not realizing that you just kind of was a benefit of timing. You came in the Tesla when it was it was really like on the upswing. That's when you came in. You came in at the right time, right? And you think it's just gonna keep going like this because this is what I want to happen. It don't necessarily work like that. I'm not saying it can't work like that. I'm saying it don't necessarily always work that way. And so many people don't know. You just got to get out. What's your exit? Right? So I may exit at 30%. Somebody else may exit at 60. I don't care, because why? I got the 30% I want to get. As a trader, you got to realize, as an investor, you got to realize you're always going to leave money on the table. That's your job. Our job is not to try to take all the money out of a market. It's not to suck all the air out of a market. We're always going to leave money on the table. That's our job. Why? For the next person. I'm not trying to make it to where nobody else can't make no money. I'm just trying to make my money. It's enough money for everybody to make money. Why? Because everybody realizes I'm not trying to take all the money out of the market. So you got to just accept that somebody else is going to make money after you. But if you just sitting there hoping, well, I'm just going to keep watching it go up because I guess you gas on the fact that the account keeps getting bigger. Okay. Right? But this individual in this story, he could be sitting on the island somewhere not worrying about anything financially if he just would have exited out of the market. Right? So it is what it is. Let's keep going. Person was in the story was in a bad spot, inexperienced and taking a more margin to expand his account. We talked about this before. When you're inexperienced and you start taking a margin, you're putting yourself in a bad position. Right? Margin is for experienced players. It is. Or for people that got teams around them that are really giving them sound advice. Margin is not for rookies. I don't use margin now. I've been trading for a long time. I still don't use margin. Could I have made more money by taking a margin? Definitely. Could have made way more money. But what's the risk though? But could I have made more money taking a margin? Yeah. A lot of people look at me like, dude, you're not really taking full advantage of your opportunity by not taking a margin. But I'm just not really comfortable with the risk right now. I'm really not. So I'm leaving money on the table by not taking margin. But you know what? I can go to sleep and know I don't owe the brokerage account a lot of money. So I sleep good. Some people going to sleep and they worrying about their positions because why? Not only are they underwater on their position, but they also owe people money on their stuff. I don't have those issues. If my positions go under, it's a cash account. It's just on me. I don't have to worry about my account being liquidated. I end up in problems with a bank. Some people don't care. Like what's the dude name that wrote Rich Dad, Poor Dad? He say he don't care if he owe the bank money. That's him. Right? That's how he operates. But many people are inexperienced taking on margin. They don't really understand it. It's not something that they've really been taught. And they end up in a bad spot, just like this individual in this particular story. You got to experience both sides of investing and learn how to invest. And what I mean by that is that many people came into this market post 2020 while the market was on an upswing. So all they experienced was making money. To really learn how to invest, you got to lose some money in this market. Right? I don't know how much money you got to lose, but you got to lose some money in this market. That's part of what we call your education. Right? If you're going to do real estate, you got to lose some money. I don't know anybody that's done real estate that has not lost money. I lost money in business for a very, very long time before I started making money. Like most people would have quit before me. So a lot of my wealth building was stagnated by trying to learn business. because I was trying to learn business. So I had to learn I had to actually experience losing a lot of money, a lot of, things not going my way, businesses going under. I had to experience all of that to actually learn how to do business, right? A lot of people don't want to go through that. They just want to come in and start making money. It don't go like that all the time. It didn't go like that for me. I'm not gonna say it's not gonna go like that for you because I don't know what God got in store for you. But what God had in store for me is you're gonna have to lose at this for a minute before you really learn how to do it. And a lot of times your learning will often sometimes dictate how long you got to lose. If you're being hard-headed, if you don't want to change, if you don't want to adjust, if you don't want to continue to develop as a person, you could stay in a spot where you just keep losing money till you just run out of money. Right? But I can tell y'all some of the stories about me running out of money. They don't tell these type of stories on the internet because it ain't going to jail and all that type of stuff. It's just I'm running the business and I'm making money, but I'm spending more money than what I'm making, or I'm not making no money right now, or my client lead flow has dried up. People don't tell these type of stories because it don't make it look good. But I'll tell you these, like, this stuff actually goes on in business. Right? So you got to learn both sides of the game before you invest it. You may have to lose some money on a house before you learn how to do houses right. Then even if you know how to do houses right, you still could lose money on a house. Right? You telling me a person does fix and flip, every fix and flip they do works? They not sitting on no inventory? It don't work that way. Right? Panita, he even admitted that on one of his interviews. He was like, yeah, man, sometimes you can end up taking a loss on a project. It go like that. He's considered an experienced person, at least on the internet side. We know there's people way more experienced than him. Right? Erica talks about on her YouTube about some of the issues she had with her trucking business. Right? She don't just try to make you think it was all flowers and lollipops. She'll explain, like, I had this issue, I had this, these things happen. So I think you got to get both sides of the game. But many people are only attracted to the good side of the story, unless it's somebody else, something negative, like they scamming, a yada, yada, yada. But they don't really want to hear the real story of, I made 50,000 this year. I made 100,000 a year after that. The next year I made 30,000. The year after that I made 70. But I'm working 60 hours a week, no matter how much money I make. They don't want to hear that story because that's not entertaining. Because it ain't no scam in it. There's no scam to talk about. So they either want to hear the story that, yeah, I was broke and I ain't have no money and now I'm making millions of dollars, or this person's scamming, but they don't want to hear the story that I'm doing 60 hours a week and my income is variable. Might make 100 grand this year, next year might make 60, next year might make 80, next year might make 150. I can't tell it come how I come, but I'm doing 60 hours every week though, just to make the money I'm making. Right? That's not a story they want to hear. So you got to learn both sides of the game, in my opinion, to really learn how to invest, right? You're going to take some losses. Again, if you don't have wisdom and you come into money, it can be difficult to obtain the wisdom before you go broke again. There's a guy used to be a marketer. He passed away. God bless his soul. Really, really good marketer named Dan Kennedy out of Cleveland. And he talked about many people believe that they don't need to learn anything about money till they get it. He says the problem is that if they get it now, they don't know nothing about it. So I've created so much content on here because I'm going to be real with you. I grew up in a household of two professional people. I'm not from the ghetto. I'm not from the slums. I'm from a working class environment in Orlando, Florida. We didn't have one conversation about real estate when I was growing up. Not one. I didn't even know what the house I was living in was worth. Had no idea. Didn't know about appraisals, none of that stuff. Millage rates, none of that stuff. Ain't know nothing about it. It was never talked about. Didn't know what my parents paid on a mortgage. Even as a teenager, I know as a kid, that stuff may not be important, but even a teenager, never knew about it. I go to Tampa 07, like I went to Tampa to go to college. Tampa real estate was at the floor then. Tampa had one of the worst real estate markets, maybe outside of Vegas during the Depression, right? Now, that was a long time. We going on now almost 20 years ago now, right? I didn't even know what was going on around me. I had no idea. I should have been trying to get as much real estate as I could get in Tampa, St. Pete, Sarasota. I didn't know what was going on because I didn't know about the space. So now Tampa real estate is sky high, right? Because when it was at the floor, I had no idea about real estate. So even if I was to have money, I wouldn't know what to do with it because I didn't know what to do. You understand what I'm trying to tell you? Because I didn't have wisdom around what to do with money. So I could have been sitting out there, sitting on $500,000. I don't know what to do with it because why? I don't have an understanding of the situation. I don't have any wisdom around the situation. Not knowing, let me start accumulating real estate while the market is at the bottom and I'll ride this market up. And I'll be one of them people on YouTube with talking, I got a net worth for $2 or $3 million and it just being like 4 or 5 different properties that I bought for, you know, 100,000, 100,000, 60,000. Because I know somebody around that time bought a townhome in Miramar for like 130. That townhome now is worth like $500,000. They bought that townhome in like 2012, years later, after the Depression. They bought that townhome, did a little bit of remodeling, nothing crazy, just did a little bit, just because of the area, because of how real estate values have gone up in the Miami area, because of everybody leaving Miami because it's too expensive and going to places like Miramar. That townhome worth now probably about $500,000. They bought it for like maybe 110 or maybe 114, a little over $100,000. Real nice townhome in a real nice area, but they didn't pay big money for it. Right? So that's what I want you to understand. The reason why I put so many videos on this channel around economic topics, financial topics, is because of what happened to me. Right? And so it don't have to happen to you. It also don't have to happen to your children. Because nobody was having these kind of conversations when I was growing up. They just wasn't talked about. And I wasn't raised by people that were smoking crack and doing drugs. That's not who raised me. But they just didn't understand that these type of conversations are important. So they couldn't make it important to me. So it wasn't until years later where I started to really realize what was really going on and started to self-educate myself. And I don't want you to have to necessarily go through that same learning curve. You can maybe accelerate your curve, right? So again, we're going to talk about when do you take profit from your investing? Ask yourself that question. If you're going into an investment space, when do you take profit? Right? When do you decide to get out of the market when you go in? Do you have any idea? Right? We looked at these people and doing those gigastar deals, right? You got a 12-month hold. When do you get out? You need for them to create a market for you even to get out. So why would you call yourself an investor in that environment when you don't even know when you can get out of the market? So this is where the lack of wisdom and understanding comes from, to me, in those particular spaces. Not saying gigastar is a bad deal. What I'm saying is that when do you get out? Right? And so that's what I want you to understand. When you're looking at yourself as an investor in a financial space, I want to always encourage you to know when you get out and also understand that everything does not have to be I exit at 65 years, right? Because it's a long-term hold. There's a lot of investments that you can go into that are a lot lower. Let me give y'all a real quick story. So I was in Chicago like a week ago, 2 weeks ago, right? Around that Midway area, you feel me? So the Uber driver drove me back from my people house back to Midway, right? To jump on to get to the hotel. He was like a Ukrainian dude, right? He told me he went to Indiana. No, my bad. He told me he went to Georgia, drove down to Georgia, paid 40 grand for some bees, right? Then took them bees to somewhere in Indiana. Y'all know Chicago real close to Indiana, the border right there. Took them bees to Indiana and was raising the bees to sell honey. And we in the back of the Uber having a conversation because he telling me he's saying, yo, this the price of a certain amount of honey. It's I think it's a price per pound or whatever. And he like, man, these people act like they don't want to give me my money price per pound. He was like, man, I let them bees eat that honey before I just give it away. Because I pay $40,000 for these bees. It costs X amount to keep the bees going. It take my time to go out here to Indiana to manage these bees. Then when I take the product to market, they act like they don't want to pay me what I want to get for the product. Well, I can have that conversation with him because I understand how markets function. So he doing Uber. He a beekeeper. They don't tell him what else he got going on, right? But a lot of these immigrant type people, they got 4 and 5 businesses, right? And he was doing the Uber Black. So we was in the big truck, right? But I can have a conversation with him about this situation because I understand how markets function. So we talking about, the cost of what it take to run the business, him taking a product to market, him not being able to get the product that he wants, him deciding, you know what, I'll just eat the product before I just give it away based on the work I'm taking. I'm telling him, man, you just got to stick through it. You know, you're going to find your market eventually. Maybe you need to reach out to people that are really passionate about eating like organic honey, and they give you the price that you want. It could be a marketing issue. We having a conversation because I understand the space, right? And so I don't know, he could have hit me to something that could have helped me make some money. I don't know, because I can have the conversation. You feel me? And so that's what I want you to understand. So that's why I filled up. If you don't buy nothing from me, I just looked at my YouTube last night. It's over 1,000 videos on this YouTube. You don't have to buy anything from me. But what you can't say, though, is I didn't try to help you get an understanding of the space to improve your education around the space so you can have the conversation. That's really what I endeavored to try to do. And that's one of the reasons why I do the video. I do the videos on Saturdays. I did videos 3 times a week for like 2 years straight, is because I realized I missed out growing up and never having these conversations, right? And it's not about formal education. It's a different conversation, because this Ukrainian dude, I'm telling you, he don't have a formal education. He just a Ukrainian guy in Chicago. You know what I'm saying? So because they come from a place where they can sit down and talk business, he know how to do business. He may not know how to go get a license or go get certified in this, but he know how to do business. He know what he got to do to try to turn a profit, and he gonna put that work in to do it. So I hope you got some value from it. If you have any questions, comments, disagreements, we're gonna put that up, and then we're gonna get out of here, because we're right at the 1 hour mark. So we're gonna give it a little bit of time, and then we're gonna go ahead and cut it. Questions, comments, disagreements, you could come on. Let me go ahead and roll that back and read through the comments, so we're gonna get up on out of here. So Terrence, man, again, appreciate the $9.99 super chat. Appreciate you coming through and being a mod. Raygun, man, appreciate the $2. Appreciate you coming through and being a mod. And Roscoe, man, have I seen the trader about Trader Sue and RBC? That's kind of what we talked about. Roscoe, appreciate the $2 super chat. So Terrence going to be the sponsor of the show. Appreciate it, and appreciate all the mods for coming through. Okay, Drop 16 came on. Give me 1 second to find my headphone. You can hear me?
Yes, can you hear me?
Hey, what's going on?
Yeah, I just had 2 things to add that really helped me understand about the taking profit and stuff.
Okay.
It's one of the first things I learned, and I remember you was saying this on a lot of your videos, and I think a lot of people, I feel like immigrants get this, but we don't get this in the United States because of all the media and stuff, is that even though you may be successful trading and stuff like that, you still, it's levels until how much money you really need to put in before like that 50% return, 20%, whatever return you get is going to pay for your day-to-day life.
Yeah.
And a lot of people, even with business, you know, you may hear someone made like $300,000 a year or $500,000 a year. You can't just look at the revenue. You really got to look at that profit margin.
Yeah.
So they may be doing these big numbers and it sound better than you working at your job. But when you actually hear how much money they take home, which a lot of people won't tell you what their profit margin is, their net profit margin, you may be doing better just working your job than how they are doing a business full time. So one thing with me with trading is, and you used to say this, people be like, when can I quit my job and stuff like that? You may just trade and just don't quit your job. Just look at it the same way you would look at owning a rental property or something like that, and just keep when you get more and more knowledge in the space, just do bigger and bigger trades as far as buying more contracts and stuff.
Yeah.
But the goal shouldn't be, you know, in 1 year, I'm going to leave my job, I'm going to be balling out and stuff like that. But we get fed this fantasy. And I started to notice this when I started, because, you know, on Instagram, the more stuff you start searching around something, you start getting more and more posts about that. And I didn't know this many people was trading. And they make posts about like quitting their job, telling their friend they a sucker for working and stuff like that for the trade. But like you said, you don't find many people that talk about the downside of how much money they lost in the bad trade or something like that. They only talk about the good side. And the second thing that really helped me with taking profit and stuff like that and being more pragmatic with it and just trading in general is everybody like to love, like, I'm looking at my account and I'm up 50%, I'm up 80%. Until you click that sell button and that money hits your bank account, you're not up anything, because it could change tomorrow, it could change next week, but people really get that dopamine hit to say I'm up X amount. Until you sell and you actually get that return on investment, you still risking losing your money. And I had a friend, he randomly got up like 94%. He wasn't even expecting to go up on his contract because it turned around on him. And it was Apple. And I told him, I was like, hey, you gonna sell those contracts? Because I trade Apple a lot. And if you trade Apple, it could reverse at any time. Yeah. He was like, I'm gonna have to hold on to it. And he does like real low theta contracts that can be very volatile. Okay. It reversed, and then he was mad at Apple. And I was just thinking in my head, like, you was up like 90-something%. Just take the profit. Like, when did you want to get out? But people really get hooked on that. I want to just keep running up and just keep saying I'm up X amount of money. But until you sell, you not up. Until the money's in the bank account, you just hoping it keeps going up. So I don't know if that helps anybody else, but those are two big things that help me.
Yeah, you're right about that. So the first point you were talking about, and because I did a little bit of e-com, I used to sell the weed socks, the socks that got the weed on them. You ever seen those? No. Okay, no, so those was real big. I don't say this is probably about 10 years ago. So I used to do e-com in that particular space. And you're right about the e-com. So it used to be real big on Facebook on selling to people like how to run e-com by doing Facebook ads, right? Now the challenge is that you got to learn two skills. You got to learn how to run an e-com business. So you got to learn how to do Facebook ads. But one of the challenges with e-com, especially from a retail standpoint, is that your margins can be really, really low based on how much work you're doing, right? So a person can be saying, hey, I got a $500,000 e-com business, but their margins could be, 10%. You never know, because we don't know what their margins are, but they're just looking at the overall revenue statement. But again, Drop 16, the majority of people in any space are people that don't know anything about the space. That's always the biggest market. So now that you've been trading for a certain amount of time, you got more experience, you got experience in business. A person can't just come at you with any message, because you're going to be like, no, that's not, I got experience. I know how this actually goes. But if a person has no experience, you can kind of come at them with any message and then go for it. So I think that's the biggest issue. It's another reason why I don't tell people you're going to trade and quit your job. Have people, based on what I've taught them, been able to quit their job. Yeah, Mecca quit her job, right? But Mecca may be an exception to the rule. She may not be the rule. And that's what she wanted to do. That's not what everybody wants to do. A lot of the most successful traders I know got more than one business. They don't just trade. I know very few people that all they do is just trade to make all their money. They got other businesses. They doing real estate. They selling education. They not just trading. So I think this narrative that you're only a successful trader if you just trade, that only works on people that don't know any better. I know guys that run big money and they don't just trade. And they running big, they run accounts that got millions of dollars in, and that's not the only thing they do. They just don't try to live off their trading profits. So I think it's lack of exposure. We talked about again in the space, lack of exposure. Again, with taking profit, it's not in your account till you actually sell it. But again, a lot of that comes from lack of experience and lack of understanding in the space. And so that's something I'm really passionate about. But I think people have to have a desire to actually get the experiences, go through some of the lumps to now get seasoned to where they kind of understand how things go.
And that's a big thing when you was talking about the 2 years. So for me, it just got past that 2-year mark. I think now I'm at 3 years. Okay. But it didn't necessarily take, and it's I don't know how you word it, but like learning how to trade as far as like the process didn't take 2 years. Analyzing the companies didn't take 2 years. Like, these are always ongoing processes, like martial arts. Like, you're never going to be perfect at the jab. If you look at like Floyd Mayweather, he's still throwing the jab and doing probably over 1,000 jabs a day. You're never going to get perfect at it.
Yeah.
But what the 2 years really shows you is like these times of being hard headed, these times of I'm gonna just let it run up, these times of not sticking to your trading plan. That's what you start getting at the end of the 2 years. Cause now I trade, especially after that last time I tried to hold Apple after those earnings and got destroyed. If the setup ain't there, I don't care. Like if the if it has 6 out of the, I have a 9-step plan. If it has 6 or 7 out of 9 steps, I say let me just paper trade and see what happens.
Yeah.
But if the setup's not there, I don't take the trade, and I don't feel like I lost anything. I don't feel mad. But the big thing is, unless I'm putting hundreds of thousands of dollars up on these trades, I'm gonna have to keep my job. So I just say in my head, this is a passive thing. I use this money to invest in other stuff or whatever, but this isn't what I'm gonna use to pay my day-to-day bills. But you got to build that mental fortitude, because you always gonna get tempted. I know at least I was of, man, I think I've seen this before anybody else. Let me go ahead and do this trade. But you got to build that comfortability, because the longer you do something, the more desensitized you get to it, where it's just like a normal thing. But when you first do something, you feel like you conquer the world. So you just start taking risks left and right. And another big thing about the exposure, and I didn't notice it until I went to Atlanta and started going to stuff like Atlanta Black Chambers and stuff like that. Like you said, once you start getting exposed to people who's really making a lot of money versus what these people are showing on YouTube, you see they in a lot of different things. They got a lot of different side streams of income, and their whole approach and thought process behind money is completely different than someone who just got some money. And a lot of these people may have family members that have been doing business for decades, so they are able to teach them stuff when they first come in. That if you someone new, because like you said, I'm new. Like my parents knew about real estate and stuff, but there's only so much information my parents had, because they just knew work hard. That's all they knew, is work hard and save your money. So you now got to go out here and get exposed to other people that can teach you this stuff. And you got to understand you new to this. So
yeah, you're 100% correct. And I agree with you. 2 years is, because I talked about before, trading is really behavior. It's really not the actual practice of trading. So we talked about Floyd, fighting is really a behavior. The skills, a lot of people, the skills you train, a lot of people got the skills, but do they have the behavior of a fighter? Do they have the discipline of a fighter? Floyd trained even when he didn't have fights on the slate. He still trained. People don't understand that. They think, because they just see the part where, that's why people's like, well, Floyd, he 40, he old. I say, no, you was old at 40. This was a dude that got in shape at 16 and never got out of shape. So that's what people don't understand, is that a lot of trading is behavioral. It's not actual. Trading is easy. All you gotta do is click the button on the computer. That's nothing hard about that. But again, if you got a 7-point plan and it don't hit all 7 points, why are you taking a trade? I'm talking about you personally. I'm just talking about in general. Exactly.
I mean, that's real.
Trade? Yeah. So that's what people don't understand. But Jimmy taught me that. He said, if the numbers don't work on the front end of the real estate, I don't buy it. I don't buy it just because it's cheap. The numbers got to work. So I'm looking for a certain portfolio strategy for his real estate. All the numbers got to line up. It's like when you fly on the plane, they go through all the checks. If they don't hit all the checks, the plane don't take off. They don't take off just because, we trying to get somewhere real fast. No, we got to hit all our checks. And so I think it's that discipline around trading. So between me and the audience, I took the Bowen trade. I took a Bowen put, right? I want to say maybe 2-3 weeks ago. I'm probably not going to take no more trades the rest of the year, because I know that the actual study that I need to do, I don't feel like I can commit myself to that right now. So what I don't want to do is trade just to be traded. But a lot of people, because of the end of the year, we're probably going to get a Santa Claus rally. It's going to run up, yada, yada, yada. They'll trade just to have something to do. I got to have a discipline. 2 years ago, I just would have been trading just to trade. And so that's what I want people to understand, is that second thing, let me say this because I don't want to hold you too long, because I know you're busy. Reason why I'm enthusiastic about you being in the space, but everybody that's in the space, is if you stay in this space long enough, you may feel like, well, the money is not at this amount right now. But because you in this space and you continue to learn the space, we're going to go into another bull run. And because you know what to do, you'll be able to take advantage of it. You see what I'm saying?
Yeah, no, that's exactly what my mindset at. Because at my job, we get bonuses And this is the first job where I get like a good bonus at the end of the year. So I'm already like, I'm gonna use some of this to pay some debt, and I'm gonna use some of this to invest.
Yeah.
Because from my buy and holds, that's easy. Like if you know how to analyze companies, how you got to do with trading and know when to buy and hold is like easy. So the trading is the most difficult part.
Yeah.
But when you come into that additional money, now you got another resource that you can use to go and pull money out. It's not about getting rich. It's not about, because the same thing, like you said, I would be looking at what other trade can I get in? What other trade can I get in? Now I'm very pragmatic, and I'm like, I'm only willing to risk this much. I need to see this set up, and then I get to the trade. And I was thinking like you. I was like, I don't know if I'm getting any more trades at the end of the year, because you always got more time to see a setup. But people get so caught up in the numbers, and I found a way to make money nobody else know how to make it. They just want to just keep trading. And that behavior thing is real, because you see people talk about like boxing. So I've been doing boxing and kickboxing for 5 years, and I still tell people like I'm still like a noob to these people who've been doing it for 10 years. But with the martial arts, just like the behavior part, at this point, when I get hit with like some punches, some kicks, I'm not even thinking about what blocks I'm doing. It's muscle memory. And it's the same thing with trading. You not even, someone can put something in front of you and you just instantly know how to dissect it to see if it's a good trade or not. You don't even, because you just been doing it so long and seeing so many charts.
Yeah, exactly.
So that's why them years are really important. But a lot of people think they know everything after I did like 3 good trades. I know what I'm doing, and then when it goes wrong, they don't know why it's going wrong. So
that's a fact. That's a fact. Like I say, everybody, when you making money, but you don't really know how you made money, you also don't know how you lost the money.
Yes, everything you said is true.
Yeah, I've been trying to tell people like I'm really trying to help people not make the mistakes I made, but I know that some of them gonna have to make the mistakes I made, right? But I'm really trying to help them not make the mistakes I made. But I know someone gonna have to make them because that's part of the process. Because I had to make the mistakes because people told me and I want to do what I want to do. So, but they can't say I ain't trying to tell them.
Mm-hmm.
Yeah.
No, you definitely. That's what you definitely tell people, and it's like how you said of the immersion. And at first, when you hear stuff, it may not make sense, but you keep coming back to it. I even go back and look at your older videos sometime, and I'm like, he was talking about this when I first got into it. I just didn't understand what you were saying. But me, I'm someone, once I burn my hand, I'm not just gonna keep burning my hand on that stove. Like I hate losing to burn my hand. Some people just they just blame everybody else. But I'm like, if I lost money, let me sit back and learn. But when you lose a little bit of money, you good. But you don't want to put 10,000 on a trade and lose 5,000 and be about to jump out the window. But I appreciate what you're doing. That's all I had to add.
All right, man. Be easy, man. I appreciate it. Talk to you later.
All right, thanks. Talk to you later. Bye.
Peace. Okay, so big up to Drop 16. So big up to Donna Desol for the $9.99 super chat. So we got Dinah and Mr. Terrence. They're gonna be the sponsors of the show. Appreciate y'all coming through. So I appreciate everybody for coming through with the support. Appreciate all the comments. Hope y'all got some value from it. Want to really encourage y'all to make sure that you manage your risk. And if you want to go through these investment risk videos, it's going to be a series. Keep going through it. Let me know in the comments what you're getting from it. If there's anything that you want to talk about, have a great weekend. Talk to you later.